please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
And hence an expected selling. Okay, the market, the bell is gone, and that's 1/3% lower. So south of 10,400, 10,390, 391 is where the Nifty is opened. Sensex opens about 110, 115 down. That's 33,750 thereabouts. And the Bank Nifty is opened a little worse, about 0.4 down. So mid caps and Bank Nifty are down a little more than the Sensex and the Nifty, but just a little worse. It's the only IT space that's giving that green support. So TCS, HCL Tech and even Tech Mahindra are the ones that are protecting the green end of the market, and a little bit of support coming in from Aurobindo Pharma and L&T. Of course, these are Oro and such like are more minor support. It's only the techs that are supporting. So at TCS, 1 day impact is all you saw of the promoter selling that stake. And it's metals and banks, a whole lot of stocks that are taking the red end. Tata Steel 1.5 down, Coal India down 1.2, SBI 1.3, Hindalco 1.1, Hero Motor down 1, HPCL is also down, Z Entertainment, Indiabulls Housing, ONGC, BPCL, those are among the over 3/4 of a percentage point losers. Overall, it's not, the market's once again reduced its losses, so that little bit of a short covering appears to have come. But, you know, we are talking still minor adjustments. Mid-caps?
Not a good opening for the mid-caps for sure. Down about 0.3%. The market breadth is very weak, so that's actually the worrying part. More than 800 stocks on the declining side. The entire PSU banking space is getting pulverized this morning. So look at names like not just PNB, of course, there's additional news over there, but Canara Bank, Union Bank, Bank of India, Andhra Bank, all down anywhere between about 1 to 3% odd. They'll come up for you in just a bit. We'll get the PSU banks, in fact, up for you. Okay, there they are. Andhra Bank now down almost about 2% odd. Bank of India, in fact, has now halved its market cap since the start of the year. So market cap is down by 50% since the start of the year. On the upside, some stocks in the news are Fortis Healthcare. It's up almost about 4% odd. Future Retail has been rising, up almost about 2% odd over there. And a couple of these stocks like Graphite India, NBCC, etc. looking good. But otherwise, the market is under pressure, especially the banks, and led by SBI on the upside, and I mean from the frontliners, and all the PSU banks in the broader market.
Okay, so as we expected, the banks are more vulnerable, but look at the move in TCS, and that I think could well be the story of the day today. I mean, if the market has to recover, it could be because of IT, but that stock is opening about 1.5% higher. There's also a bit of a tailwind for that one. But banks in particular are opening now right at yesterday's low. So will be interesting to see. On the Nifty also, we are very close to yesterday's low now. Ashwini, is there a first trade here? Now down about 150 points on the Bank Nifty and 40 points on the Nifty.
Yeah, I think Bank Nifty you can easily go short on because the market isn't really recovering, and there is some extra tailwind that the banks have on the downside. So my sense is that the Bank Nifty could lead the market lower. Again, I think the pullback rally or short covering, etc. is all done. And now from here, the market seems to have turned. So have other global markets. Now you will keep getting news flows which will kind of support that view sometimes go against. But overall, today, all sectors are weak. Just the IT sector is higher. So this is a good time to get short on banks, and that is where the clear trend is there. IT is up, 90, 95 points, but I think financials are going to take it on the chin.
Okay, and what would be the stop loss for that short trade, Ashwini?
See, basically today's high, which is about 24,740, that should work as a stop. The Bank Nifty is breaking below yesterday's low, which is significant because yesterday was kind of panic low. So once we break down decisively, I think the next kind of support or target for this trade could be 24,500.
Okay, actually there's only City Union which is in the green, otherwise all banks are in the red. And I mean, I wanted a view on ICICI. Sudarshan, any view?
Well, ICICI is a complete avoid today, and the Bank Nifty is likely to move lower. We are short in the Nifty using 10,400 put options, and the stop loss itself is the cost of the put, because we can see volatility, we can see sharp surges, but it does appear that the market is heading down. Coal India is a short sell. That's a trade we can take intraday, and TCS is an intraday trade buying opportunity. Don't carry the trade overnight.
Mitesh, is there a short in IDBI?
IDBI, I think maybe yes, keeping a stop just about 69. But again, I think this is not the best level to go short. Maybe around 67, 67.5 you would want to go short. But that about, I think the market is clearly showing one distinct trend, and that is strength on the IT stocks. So I would still continue betting on that side, and HCL Tech is something which possibly looks like could pick up good steam today.
Okay, well, for now the market is still down about almost 100 points on the Sensex. Okay, that is disappointing. Yeah. Okay, Stephen Hawking dies at the age of 76, just coming in. Well, what a celebrated life he had, right? I mean, he was a physicist, he was a cosmologist, so many books on his life.
All the personal
failures.
Exactly.
Yes.
Let's now focus on market again. There is a bit of a recovery as well on the Nifty from the low point. Again, the market is making a trade right now, which is short the Bank Nifty and long the IT index. IT stocks are doing well. Ashwini, mid-cap IT in particular is looking really strong. Thoughts on stocks like Mindtree?
See, these guys will outperform. They won't fall as much. But to think that, they can continue that sort of outperformance if the market starts to break, I don't think is a great idea. The big trade is on the short side, and that's what people should focus on.
Okay. Well, Adani group of stocks, is there any short?
See, all of these are high beta, and they tend to move in the direction of those high beta stocks. High beta right now is banks. So at higher levels, all of these guys should be gone short on.
Okay, gentlemen, thanks a lot for stopping by and speaking with us. We'll come back to you for more calls. But for now, let's invite our market master for the day, Tushar Pradhan, the CIO of HSBC Global AMC India, joins in to give us his view on all that's been transpiring so far. Tushar, hi, good morning. What's the advice to investors now? Is it time to sit back, sit on some cash and wait for this volatility or this dust to settle? Or do you think that the worst is behind us and perhaps it's good to deploy some money now?
I think what is very clear is that volatility, which has been almost non-existent, if you take the VIX as an example, or for that matter, even if you look at the local markets, that I think was something which was surprising a lot of people. People were worried that volatility seems to be dead, but I think it came back with a vengeance. And I think if you take the longer term average, I think volatility is back. Now, one need not be particularly perturbed by the fact that volatility is back. I think it signals more of a normal market behavior, because markets are volatile. When there was no volatility, there was a fear that the markets have basically understood everything there is to be known. The signal that the central banks are giving is very clear, that we're going to raise rates by a certain percentage over a period of time. There is adequate liquidity. So that led to a pretty significant drop in volatility over this period of time. But I think with the market now becoming a little uncertain about growth in general across the world, increase of inflation a lot more than most people's expectations, commodity prices firming up a little bit, all of that has led to volatility coming back into the markets, which I don't feel really very worried about, because that's actually the normal for most markets. What's the advice to give to investors? Obviously, I'll stick to my longer term view that if you're an equity investor, then volatility is something that you need to kind of just digest along the way. We have to focus on long-term earnings growth. I think India is on the cusp of a recovery in terms of economic cycles, and I think earnings will follow. So I think I would kind of just say that sit tight and wait. I think the best is yet to come, as long as you have a longer term view going over 5 years or so.
Okay, by the way, the mid-cap index is almost already in the green. So obviously there is recovery. The Nifty is off the low point. Is the bank still struggling? And while IT clearly is the big trade right now, which is happening, just keep an eye on Titan as well. That minor decline in Titan has been bought into. So, if you thought gems and jewelry would be under pressure, perhaps that's true for other stocks. But on Titan, immediately,
that may be the one which will be advantaged, maybe.
Exactly. Perhaps the market is thinking that actually the unorganized players' loss is going to be Titan's gain, and that really has been the story with Titan. So obviously, that is the one which is actually making the highs of the morning. But Tushar, good morning. So in terms of fund flows, Do you reckon that in spite of all the volatility that we have seen over the last 2 or 3 months, and February was a great testament that the fund flow situation is intact, do you think this market can absorb another 5 to 10% without impacting fund flows?
Well, I think the jury is out whether, what's the time that the investors really throw the towel as such. But I again would think that flows are really the outcome of what has been explained to investors for a while. In a sense, I think if the explanation is that the economy is on an upturn, we have, probably the fastest growing economy in the world, corporate earnings are likely to improve. I think if that story is well digested, I think investors will continue to remain positive. Only if there is a substantial external event which would cause all markets all over the world to kind of react very sharply downwards. India will not be an exception. It will also follow the trend. And I think then there will be a test of patience for the domestic investor to say, well, should I then take some money off the table and then go back into cash or some other alternative asset? But again, I will emphasize the fact that volatility is the nature of an equity market. As long as investors understand that that it is always going to be volatile in the short term. But if you focus on the fundamentals and if you focus on the fact that earnings are what drives stock markets over the long period of time, then I would hope that the investors will stay firm. But as I said, investors react, and if there is a very, very sharp downturn, then we can see some tapering off of the flows. But I don't think that is likely, given the fact that we've had almost a 10% drop since the peak that we have seen this year, and investors have stayed put. So I don't see why they will not continue to have the confidence unless there is a very sharp move downward.
Okay. Good morning, Tushar. I just wanted to pick the rupee for a minute. Can we just see? Looks like there is some bit of dollar buying that has taken place. So it's clearly 20 pice more expensive than where it began, or maybe 15 pice. Started off at 64.87, so it's a 16 pice more expensive currency at a time when there has been global dollar weakness. So there is a little bit, but I'm quite sure this is not a trade related thing. It could be more sentimental because of the way equity markets have fallen today. It may not necessarily be trade credit, which appears to be something which will be more long drawn as an impact, if at all. Okay, to come back to what we were discussing, Tushar, you have to get into the market now with a 5-year perspective, you're saying. What kind of sectors now should a fund manager hide in? Is it tech and pharma kind of stocks now?
Well, there is two ways one can think about this. One is what is cheap, and one what is taken a beating. So the difference between IT and pharma, I believe, is that IT genuinely is cheaper compared to the kind of ROEs it generates, as well as its historical valuations in the past. Compared to that, clearly the sector is cheaper. However, if you look at growth, dollar growth in terms of revenues for most of the larger IT companies continue to be constrained. So it falls into something what I call as value, but not growth. So it's actually cheaper, but it's not relatively cheaper to the growth that one can expect out of it. So, but that's a place to hide. Pharma, on the other hand, is more to do with the fact that there's been a fairly sharp reaction to what has happened to the US FDA observations, and generally the atmosphere being vitiated by the fact that these companies seem to continue to attract some sort of regulation and action from the US FDA. There, if you see, that has actually led to a significant drop in production and by turn a drop in revenue and profits. And the valuations which have come off are actually in line with the drop in earnings. So which means that the multiple has not necessarily become cheaper. So that may not be a good place to hide unless you feel that the earnings are going to come back, these observations are going to be a thing of the past, and production as well as profits come back. But you have to remember that in the US, the generic market is made up of timing issues, in the sense that if you launch a product well in time, then you make the upside in terms of the prices. But if you come into the market later, the price power that you have, the pricing power that you have is much lesser. So even if you actually then can export and manufacture it back into the US, you may not get the same margins as you were expecting before these observations began. So I think all in all, I would think that it's an even bet. One has to be a little careful, one more selective about what one buys in pharma. So I won't this time.
Okay, so pharma is not a place to hide. What about banks? I mean, you have a large exposure to the banking space. In your HSBC India Opportunities Fund, you hold corporate banks like ICICI, you have HDFC, Yes Bank, IndusInd, etc. What have you made of all of these scams, the clampdown on short-term credit, the banning of LOUs, etc.? And what kind of a longer-term ramification do you think this could have?
Yeah, so I think we clearly have the belief that the India story is on its upswing, and that will have to carry the corporate sector and by in turn the banking sector with it. Now these observations which are coming out and the impact that it is causing is clearly a reaction to the events which have happened in the past. So all it means is that the impact on the stock price is something which was not discounted by the market given what has happened. Going forward, I think the better banks, the ones which are better capitalized, which have better access to the markets, so that in case that they need to require more capital, they can quickly come and issue stocks at a price to book level which is not really detrimental to shareholders in the sense that it is a multiple of the book rather than a percentage of the book. So I think it is more to do with the fact that the stronger banks, they will tide through this crisis and probably might be the future growth leaders. However, it cannot be said that all of the banking system is in healthy state, and clearly there will be some banks which will face trouble. So I think one has to be a little picky, but on the top, if you look at the banking sector from a top-down perspective, I think all of it is under pressure, and that's showing up in the prices. The fact is that these things are volatile. It will take some time before the market realizes which banks are more stronger than others, and then I think that's the bet we are taking in terms of where we think most of the stability still continues to be.
All right, Tushar, we'll leave it there. Thanks a lot for your time today. In fact, the Bank Nifty is now making lows of the day, and you see the intraday chart. And in fact, the force of selling in Bank Nifty is so much that it's carried the Nifty also lower along with it. You thought that at least on the Nifty there was a bit of intraday recovery. That's also getting sold into, and now the Nifty is also making lows of the day, though still outperforming the Bank Nifty, of course, but banks in particular are looking incredibly weak right now. But let's invite our next management. The January IIP, of course, was quite strong, 7.5%. Capital goods, in fact, saw sharp increase by about 14.6%. MS Unnikrishnan, MD of Thermex, is with us now. Mr. Unnikrishnan, good morning. So your thoughts on the numbers? Do you think a significant recovery is underway?
Not significant. Significant can be interpreted in any way, Anuj. There is a recovery visible when I look at the entire sector. The order intake from the topmost to the average to the smaller MSME levels, there is an improvement in the last 1 quarter. Equally, the inquiries which are there on finalization stage across the board in majority of the capital goods sector, we are seeing a positive movement also. So one is the orders already concluded, and second is what is going to be concluded in the next maybe few quarters put together. There is a positive sentiment prevailing. So I need to admit that things are looking better, can be better in the future. That's a conclusion I'd like to make at this point of time.
Okay. Good morning, Mr. Unnikrishnan. Actually, this is 3 months in a row that we have seen capital goods giving us this double-digit uptick. I know IIP numbers are a bit suspect, but they are directionally usually correct. So, can we say, okay, can you tell us which sectors are giving orders?
For a change, all the 3 sectors, that is a consumer-facing sector, the infrastructure sector, and also the durable sector, all 3 of them have started investing. And consumer sector in any case was investing for the past 3-4 years when things were down also, but the ticket size was smaller. But the infrastructure area, which I used to talk about, the oil refinery expansions related to Bharat 6 ordering is almost getting completed. Second stage is going to be starting. 2 new refineries are already in the market for ordering out. Fertilizer, 3 projects are already on a takeoff stage. These are generally seen in that area, and cement, Lata, is really seeing some positive uptick. Steel is looking up. So there are orderings started in cement sector, both for the waste heat recovery based power plants. equally also for the greenfield inquiries are in the field. So across the board, barring the main power sector, the power sector is still under the lightweight level. I am not expecting a revival of any kind in the next maybe couple of years to happen also. But barring that, we can see movements happening. Then there are isolated sector which people, all of you are talking about pharma earlier. I mean, I'm seeing Indian companies looking at a lot more of impetus happening in the local spending of pharma, and the guys who are focusing on Indian market of pharma are also started investing in that. I can see in the automobile and related areas like virtually every tire manufacturer, carbon black manufacturer, all of them are also expanding capacities. So it's across the board, let me say. What we witnessed in say maybe 2003 is what I'm seeing at this point of time, a movement towards a positive. Will it sustain will depend a lot more on the global facts rather than the local, because we're too small an economy.
Oh, that's the brightest statement. Mr. Unnikrishnan, that's really the brightest statement. Feels like 2003. I mean, that was a start of such a dream run. Well, so go ahead, sir.
No, in fact, we haven't heard that kind of commentary for a very long time. Yes, go ahead, sir.
I was telling that if the global cues were to continue the same way, because we've virtually cleaned the European mess. I mean, the world has cleaned it up. And we can see even Germany getting into stability with the government coming back into order. Since we operate companies in European continent, we can see an uptick in the entire of Europe, which was a major problem in the past maybe 5 to 6 year period of time. Japan is growing despite the political instability over there. America, we can see a lot more of manufacturing being forced upon on the country. So barring the Chinese edifice, which is unknown to all of us, we are seeing positive sentiments prevailing in Southeast Asia. Even in the troubled Middle East, we can see the refinery expansions and projects getting announced. So overall, when I look at it, Lata, I possibly believe that if global cues can remain the same way it is and no negatives.
Can you give us, Mr. Unnikrishnan, can you give us some numbers to this? You know, last quarter your order inflows went up by almost about 20% odd. Currently, what's the backlog looking like? What kind of growth can we expect in order inflows?
I'm expecting overall at least maybe a 24-25% improvement in the order book at the closure of the year is what I'm looking forward to. Which should lead me to a better year next year, though I'll grow only marginally in the current year. But as a group, we should grow fairly well, which we have not seen for the past 5 years in the next year. And if I look at the inquiries which are there across the board, if you were to be only a domestic player, purely a domestic player, then you cannot grow more than maybe a single digit. But if you're a global player, there are possibilities of you becoming aggressive and picking orders everywhere in the world, and look forward to a teen level of a percentage growth for the coming year. That's what I mean. I would say that for most of the larger Indian organizations.
So what's what is the absolute number now, or what's the order book currently? And a 24-25% growth would do what to the order book?
Last year we closed closer to 4,000 crores carry forward. Current year, as I mentioned about, will certainly be at least a 25% more than that in order intake. Even if I were to keep some very large chunky orders which were one of kind, still there is a double-digit growth in the order intake, which is a positive sign. I'm not talking about our company alone. I'm talking about most of the sectors which are prevailing in the capital goods are looking positive at this point of time. But don't conclude anything right now. My request to you is that most of the time we take this kind of a statement or maybe a something which is very nascent in stage to project or over project. It is a positive sentiment that started prevailing in the industry right now.
Okay, just one last word then. What's the capacity utilization like for your company? I mean, just as a dipstick.
Well, I started the year with a 60% capacity utilization. Currently, I'm running at around 70s, and I'm looking forward to filling a couple of my factories to the brim next year. Some of them will still run at maybe a 65-70%.
Oh, that sounds excellent.
We are a little, largely side. Yeah.
That really sounds good, sir. You expect your factories to brim next year. Thank you very much, Mr. Unikrishnan, for putting things into perspective. Barring the power sector, most of the other sectors are giving in orders. Consumer sector, production-related sectors, infrastructure.
Yeah.
That's too good to hear. Damn good.
Okay.
That's a bullish voice, of course. By the way, just want to point out Adani Enterprises. That stock is making highs of the morning. It's broken into the green and is seeing recovery. In fact, mid-cap market is not that bad today. It's only down 33% on the index. And advanced decline is quite okay over there. It's just the banks which is
Adani
a bit of a
Enterprises.
problem. Yeah, Adani Enterprises. And
Are
in
you
fact, a lot of
sure?
stocks.
Mine is not showing.
No, it's the high of the day. But the other stocks making highs of the day as well. There's Berger Paints, Balrampur Chini, DHFL, Capital First, Jet Airways. So a lot of stocks actually making highs of the day as well at this point in time. So let's see. Mid-cap market at least looks quite okay.
Okay, well, the frontliners don't. The Nifty and the Sensex are down about 0.4%. But we're going to pose all of these questions to our next guests. So we have a very exciting half hour lined up for you from 10 a.m. this morning. Ramdev Agarwal, as promised, the joint MD of Motilal Oswal Financial Services, will be with us. He'll join in to talk about all the market volatility. He will also help us in quizzing Keki Mistry of HDFC, who is our big guest of the morning as well.